We're into 2025. It's a new year, new expectations, new hopes, new dreams, whatever you've got. But also, what do we expect with 2025? What's going to happen with our money? What's going to happen with the economy? What's happening with investments? Could you be in something that's dangerous that you need to get out of? Could you be looking at something in the future that could even be better? That's what I want to talk about in this episode right now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you that works so hard for your money, and you're now ready for your money to start working harder for you today, right now, not 30 or 40 years from now, but you want it today so you can live that life that you love with those that you love. But it's not just about getting rich, it's about living a rich life, because as you are blessed financially, you now have a greater capacity to bless the lives of all of those around you. And that is the ripple effect I'm here to create for you today, because I love seeing you guys prosper. I love seeing you be successful. By the way, if you've gotten good stuff from the show, shoot me an email. I'd love to hear about it. Hey, as a reminder, guys, this is the big thing, is that we're into 2025 now, our 11th season on this podcast. Thank you so much for tuning in. You guys have been such a big part of this movement that we've had, and really helping us really bless and create a ripple effect through more people's lives. Here's all I would ask. Would you mind sharing this episode, or mind sharing your favorite episode with some that you know? Love for you to share on social media. Feel free to tag at Money Ripples. Anything you can do there. Love to be able to share that, and just whatever you think would be like the most impactful episode for you personally that could also maybe benefit somebody else. That's the best way that you can actually create a ripple effect without you having to do all the work. Let me take all the work for you, just like I'm doing right now. So please do so. All right, so let's talk about 2025, right? I mean, we've just got done with a very interesting 2024 year, haven't we? Now, regardless of what might happen in your own personal lives, I mean, there's all that kind of stuff. I know a lot of us have all had our own struggles in different ways, shape, or forms. I know we've even seen layoffs happen in the last while, especially with the tech sector. Not really being discussed a whole lot, but I've seen a lot of people, including our own clients and even people I know and family members, people like that, friends, people have actually been losing jobs. Yet, apparently, we're at full employment. And so you have to kind of question what's really true and what's not. Now, I'm going to tell you right up front, 2025, my prediction is, who the hell knows? All right. I really don't know everything that's going to happen. I can see a little bit shorter term, but the truth is, anybody who tries to create like Nostradamus like predictions are going to be wrong. Right. And so I want to talk about what I'm looking forward to myself, right? Like even my own money. Where do I want to put my own money? Where am I looking to put some of that? What do I worry about? What are some things that I'm watching out for? I really give you those kind of predictions for 2025 based on what I'm seeing right now. Now, this could be different later in the year. There could be other things that happen, other events that could throw these things off. But this is what I'm personally doing, and you can take it with a grain of salt. This is not to be taken as investment advice or anything. But here's what I'm looking at doing right now for the year 2025, and my predictions why I'm doing that. Okay, so first and foremost, 2025, you look at almost anything out there right now, it's pretty euphoric, right? Trump's becoming president. He's about to get inaugurated here in a few weeks. So a lot of people are thinking now that we're just going to see this massive boom in the economy, which is possible. I'm not putting it past them, depending on what he and his little brain trust are trying to create together, right? But at the same time, how much of it's hype, how much of it is going to be reality. Um, my my personal opinion is that usually the hype that comes with it, usually the truth is somewhere quite a bit watered down, right? Yeah, that's the thing. Remember, everybody was freaking out just a few years ago that we're going to have all this student loan forgiveness, and yeah, there's been some of that, but we keep getting to courts overturning it, right? So there's a lot of things happening that everybody freaks out about, everybody gets excited about, or they get fearful about, and then usually the reality is it's much, much less. Even if you didn't want President Trump to be president, I can assure you it's probably going to be not as crazy or not as bad as what you're imagining in your mind. And for those of you that are supporting him, it's probably not going to be as good as what you're thinking in your head either. It's going to be somewhere in the middle. That's my prediction, is that you're going to see some of the markets not, they're going to kind of respond back to more reality a little bit more versus what they've done. And that's why we've seen kind of the market, the typical Santa Claus rally of December, late December, didn't really happen. It actually was kind of a Santa Claus sleeper. If anything, it wasn't even a rally. The market kind of settled back downward instead of going upward, which is really typical at the end of the year. So now we're kind of going into January of this year 2025. And so just be aware that a lot of political things, yes, it could actually help, but I don't think it's going to be as impactful as some people are predicting. It's not going to be like everybody's going to be, becoming rich and making lots and lots of money. I don't even think the stock market, I personally don't think the stock market will be as strong this year. I know you've heard this. If you've been listening long enough, you've heard this from me year after year. But the truth is this, is that guys, that stock market keeps getting more and more overvalued. Now, a lot of that's based on, other factors that aren't like they used to be in the past. Like, for example, it used to be all based on how people are trading, buying and selling. Well, now we got a lot of bots and AI type of stuff doing the buying and selling of our stocks. That's good, but it can also be bad in some ways. That speeds up trades, which is fast. It can actually create more of a growth in the stock market, but it could also be bad because that could also crash it too. It can also do the same thing in reverse. It create more volatility, and so that's the one thing I am kind of watching out for. This is why I'm not putting money in stocks this year. Again, you do whatever you want. I'm personally not putting any more money in stocks at all. I'm not even buying more Bitcoin right now. That's the other thing too. I'll probably do a separate episode just on crypto and things like that. But I'm not buying any more Bitcoin. I do expect that Bitcoin could go up still overall, but I think the big run you saw was probably the biggest run you'll see was more last year, not this year. You're going to see more of the dumb money going in, and then you'll see the price maybe settle back down. Now, if I see stock market crashes or Bitcoin type crashes or whatever it might be, or crypto crashes, sweet, you might see me try to buy in. I've learned this is that when it comes to investing, I don't buy when it's hot. I learned that rule when I used to be a stock trader. Never trade on a hot tip was always a rule that it was just a basic rule for all stock traders, at least good ones, not the bad ones. But for good ones, you never trade on a hot tip because usually by the time you got the hot tip, it was already hot. The money was already made. It's not the time to get in. This is the problem with listening to the typical media right now is that we hear about all these things that talk about how amazing it was. Like hardly you didn't really see hardly anything in the media about gold and silver running up and skyrocketing in price until after it already done it for several months. But up until that point, there was just whispers, but it was creeping up on, without anybody knowing. In fact, even Bitcoin was kind of stealing the show a little bit when gold and silver was also running up too. Sure, it wasn't as drastic as crypto was or Bitcoin prices, but gold and silver still had a nice run, So if you had bought gold and silver when it was cheaper a year ago, you're happy today because you just watched the value of your money like grow by like 50% there. Here's the other thing with the stock market. Stock market for the last 2 years has gone up over 20% per year. It's about 23% last year, almost the same the year before in 2023. So 2023, 2024, 2 big years. That means the stock market went up nearly 50% in just 2 years. Now, not only was it already overvalued, because really 2022 was just this tiny little down year. It was like, yeah, I mean, tiny in comparison to the overall trend, right? It was like a 20% down year. And then 2023 made up for those losses basically. But the problem is this, that in the last now going on from 2009 till now into 2025, we have had only one down year. That's unheard of unless you were investing in the mid to late 80s into the 90s. The last time we saw 2 years like the 2023 and 24 era was in 1998 and really the late 90s, right? 98, 99 era. Well, what happened after 99? Y2K, market comes crashing. And then even after it recovered a little bit, right to where it got to the previous high, then boom, we had another recession. This is why the predictions right now with a lot of the big institutions, and they can be wrong all the time, by the way, but even the big institutions, they're predicting that you might see a 3, 4, maybe 5% return in the next 10 years as an average annual return in the stock market. Think about that. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. If the S&P 500, the one that now people are telling to go into versus just usual mutual funds, what if that only averages 3, 4, maybe 5% a year? Guess what? Now you're looking at fixed investments being better, which is why you're seeing right now the 10-year Treasury is still been going up. It's creeping back up. This is why mortgages, the 30-year mortgage, has been going up, even though the federal funds rate, which uh, really prices banks' interest rates, it prices your home equity lines of credit interest rates, lines of credit in general, are all based on the federal funds rate. Well, yes, the feds have lowered it by 1% since last fall. Well, you've seen it drop there, but the other interest rates have been rising. They're disagreeing with that. They're saying, no, 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 no. Things aren't deflationary enough, right? There's still inflation worries. And now people are, and because people also think that the stock market's been overvalued, they're throwing more money into like treasuries and bonds and things like that, driving that up. Now, I think bonds might be, it could work out, but there could be some high risk bonds too. A lot of junk bonds, I would definitely stay away from. But treasuries and more basic like bonds, like government bonds and things like that, they're getting higher yields right now. They're making more money right now. So people are putting their money there because they're saying, why would I gamble my money in the stock market? It could be going up or down. That 3 to 5% average means that there's probably a lot of down years they're expecting in the next decade, maybe similar to the 2000s that we already witnessed. Maybe that could be happening again 25 years later. So people are now rushing to these fixed income, fixed type of investments. This is also why I'm focusing more money. And even my wife was saying just to me the other day, she's like, I don't want to keep hardly any money in the bank. I don't want to risk it. I don't want to push those FDIC limits because I don't trust that those limits are going to be hold. Great. I said, life insurance. That's why I'm using my infinite banking policies, building those up right now as a great place to store more cash. So I'm doing that. I'm holding my money more in life insurance than I have before. So I'm storing more cash. I'm kind of following Warren Buffett right now, where you're seeing Warren Buffett move more to cash and selling off a bunch of stocks. He's bought a little bit, but he's been mostly selling, right? And then just building all this cash to the tune of over $325 billion that Buffett's been storing up. So I'm doing kind of the same thing. Now I'm still investing. Right? I'm still buying real estate. I'm not doing so much on the as much on the rentals unless I find a really good deal. I'm being more selective there, but more looking at things like debt, investing in debt funds still, because again, interest rates are higher. That even means that if they're trying to go to the bank, they're going to pay more. Well, they might pay me more as well. I'm also looking at things like, I've been buying more into like, more alternative classes. Like we've done some oil and gas in the last 6 months to a year. We've done like more raw land and things like that. Doing those kind of things that do help grow and or generate cash flow. Right. And so that's what I'm doing personally. I have clients doing a lot of different things. I mean, right now, a lot of them we are encouraging, make sure you have a good cash reserve, have that cash savings just in case. That's helped a lot of them, especially as they got laid off. That's a big deal. But also just having not just cash on hand, managing your debt, make sure you're keeping your expenses under control, make sure you're finding ways to, again, just be wise with your money management. And then when it comes to investments, watch out because a lot of bad deals are coming out. I've had so many people sending me deals that I would say, I wouldn't touch that with a 10-foot pole. I can't advise you on what to do, but that looks scary. I see a lot of people still like, I'm seeing a little bit coming back in the apartment space, but there's certain markets I would say, why would you dare go into that market? It's already crashing right now, or about to crash. Maybe it's already had its heyday, but people are going in late into that market, right? There's some things like that. I've definitely looked more into industrial, like industrial type of commercial real estate instead. Office buildings, not so much, right? Hotel conversions, not so much. Not so much that. I'm not saying that these are all bad deals, but it's so important that you find good people, people that actually are trustworthy. So, anyways, I don't want to beat a bit of a dead horse on this, but I am watching out for a lot of bad deals, a lot of players out there, a lot of people that I actually believe will start getting shut down. You'll start hearing more deals about deals going south, not just in like the apartment space. I think that's kind of over. I'm not really seeing a good trend yet in self storage, although there's still one or two deals that might be coming. I think you'll see multifamily coming back, like apartments and whatnot. So you probably will see better deals come out here in 2025 for that reason. But what I am seeing though is that I'm definitely kind of staying away from the hype, right? And really most of the hype is around stocks and crypto. Those are the two places that I don't trust at all. I would definitely not want to put my money there. The only time I want to put my money in places like that, and usually it's more play money if I do, it's going to be if I see a crash happen again. Something, a big, big correction, not a little correction, a big correction. You see a correction to the point where people start saying, I don't like this anymore. Good time to buy. That's a much better time to buy than when people are still hopeful, saying, oh, it's correct a little bit, but I'm still hopeful. That usually means it's still on its way down. right? Or it hasn't quite got that low, that bargain price yet. So again, like I just like good, stable, steady income. I like to store my cash in good places I can trust. Yeah, the banks are, the rates are coming down on the insurance on the savings account. I can do much better in my life insurance. So I'm putting more towards that to build up cash that can make better money on better interest than even the stock market's predicted to do in the next 10 years. By the way, my life insurance is paying 6% a year right now, tax free. Where the stock market, if it only does 3 to 5% in the next 10 years, I'd be better off having my money in the whole life instead. Even if I did nothing else, that would still be better. However, I'm also still investing in real estate, just different types of real estate than what you might have heard me say on the show even just 2 years ago. So my prediction for 2025 is we'll see, right? We'll see what happens. We'll see if anything that Trump does actually leads to more a boom in the economy, which could also create more inflation, which could also stop interest rates from falling, which could also mean interest rates will be better on the whole life side too, for that reason. But there'd be different things. Maybe the bonds and treasury would be a better place to store money versus your stocks, right? It might be better to be able to have your money working hard for you in real estate, depending on the type of real estate. I think that some real estate will not appreciate as much as some people say. I do not bank on appreciation. I bank on what's going to pay me cash right now, or those things that actually have good growth right from the get-go, that I can see that growing well because, maybe buy low, sell high. That's about it. But again, I would focus so much on make sure you manage your money wisely. Make sure you are managing the debt, using the strategies we teach you on the show about which debts to pay off, which ones to keep, like the cash flow index. Look that up if you haven't watched those episodes already, and really just be a wise steward of your money. Make sure you're careful. If there's any way we can support you in your goals, especially going into this new year, especially if you're looking for ways to store your money and even get it to work for you harder, so you have to work so hard for it. If that's a goal, hey, let us know. Reach out to us at moneyripples.com. In the meantime, guys, I'm excited for this new year. Thank you for being with us now into our 11th season of this podcast. I'm becoming an OG in this space. Thanks to you guys. Again, let us know how we can serve you and best help you out. Let's make it a great year, the best year that you've had to this day. And we'll talk to you later.